Hey crypto friends, I'm Garrett and welcome to Altcoin Radar. Now, for the past year or so, I have been using a basic moving average strategy that's been making me over $100 per day trading cryptocurrency. And in this video, I'm going to be walking you guys through exactly how it works so that you can try it on your own. Now, before we actually go ahead and dive into the video, for those of you guys who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. So guys, first and foremost here, all right? First and foremost, this is an extremely risky thing to do, all right? If you do not have very much money in your trading account, but at bare minimum, to be able to make $100 per day, you're going to need at least $1,000 minimum in your trading account. And even with just $1,000, even with that small amount of money, it's going to be extremely risky. And the reason why is because you will not be able to manage your risk very easily with those smaller position sizes, but it is definitely possible. All right, so today we are going to be trading off of the 1 hour charts, or I'm going to be showing you how to trade off of the 1 hour charts, simply with 7 period moving average and these Fibonacci levels, these short-term Fibonacci levels. All right. So as you guys can clearly tell, what you do with the Fibonacci levels is you go from your short-term swing low to the short-term swing high if it is a bullish trend. Now, if it is a bearish trend, you're going to go from the short-term swing high to the short-term swing low. All right. So right now we are looking at the Solana chart on the 1 hour chart, and as you guys can clearly see, I have got my 7 period moving average right here. It's this white line that you can see between the candles. All right, and then right here with these blue lines, this is my Fibonacci levels. All right, so what I did here is I connected from the swing low down here to the current swing high that's going on right now, and then some conditions that I specifically look for when I am trading like this is, one, the very first condition I look for is I look for far deviations away from the moving average. All right. 9 times out of 10, when price action, which is the candlesticks themselves, when price action deviates far away from the moving average, it typically tells us that things are getting extremely overextended, and there is going to be, we want to start looking for candlestick patterns for a potential move to the downside or to the upside, just a reversal. All right. So as you guys can clearly see right here, there's 3, I can see 3 of them right here, just clear as day. All right, actually 4 of them. So here on this very big downslope that we had, again, here we are. This is the deviation. It deviated far away from the moving average, and then it reversed. All right, and then here we are again. Price action went up. It deviated far away from the moving average, and it started to come back down again to retest this Fibonacci level. All right. Now, here's another one. We ended up going way up. This candle ended up going up really high. Let me go ahead and grab my brush here. We ended up going really high in this candlestick, and we deviated super far away from the moving average, and we ended up coming back down, and we ended up coming down and coming down to test this Fibonacci level, this short-term Fibonacci level right here, and we ended up creating pretty much a shooting star candle, and we ended up going back down to retest the next lower support area once again, and that's exactly what happened. Now, here we are again in this one right here. We ended up deviating super far away from the moving average once again, and then we created a bearish spinning top candle right here. So I would not have entered quite yet on this short right here, but I'm going to enter on the next candle. All right. So when we deviated super far away from this moving average right here, that tells me, one, things are overextended and we should start looking for reversals or potential reversals coming up. All right. And this is exactly what happened. The next candle opened. It created what's called a bearish spinning top candle right in here. And the next candle ended up opening. And instead of it going upwards once again or clearing the previous candle, it ended up going downwards and through this moving average right here. All right. So because this was a bearish spinning top candle, now here's the thing with bearish spinning top candles. They're they're typically what's called indecision candles, meaning bulls and bears don't know what the hell they want to do. All right, they don't know what's going to happen. They don't know what's going to, what they don't know what they're going to do. All right, so we just have to wait for that next candle to open and see where the next candle ends up going. All right, now since this next candle ended up going down and going down past, let me go ahead and get my arrow tool. It ended up going down past the previous candle's wick right in here. Because it ended up going down right there, I would have shorted right there, because that would have told me, let me go ahead and make a line for it, I would have ended up shorting right here at this level. All right, and the reason why is because once it goes down below that previous candle right there, that tells me personally that bearish momentum has taken over, because we are overextended on the short term right here, and we are going to start going downwards, either to retest this or even further go below the moving average and go even down even further and further and further to retest other levels. All right, and that's exactly what happened here. Okay, so I would have entered this position right up into here, and when that happens, all right, the first thing you want to do is, once it gets down to, let me go ahead and grab the brush again, once it ends up coming down to this first Fibonacci support level, you don't want to all of a sudden take profit. All right, what you want to do is you want to move your stop loss into profit above the moving average here, because obviously if price action ends up going back above the moving average, then there's a good chance that, things might start to turn bullish once again. All right, but since it didn't, it ended up going down further and going right through this Fibonacci level right here, okay? And then we ended up coming out, we ended up creating a bullish spinning top candle. Again, there's that indecision once again, but it did not go higher than the moving average, okay? Then the next candle ended up opening, it opened up pretty much right at the moving average, and it ended up going back down and coming down even further. Now, once we get to the next Fibonacci level, then you want to move your stop loss further into profit. So what I would have done is I would have moved my stop loss from the top of the moving average up here down to this Fibonacci level right here. All right, because now this Fibonacci level is acting as a layer of short-term resistance. All right, so you put your stop loss in profit right at that level, and then you just continue to ride it down and keep repeating that process over and over again until the price action stops at one of these levels and starts to go back upwards towards the moving average once again. All right, because once that happens, then there's a potential possibility that price action is going to start going back above the moving average and start to get bullish once again. All right, so realistically here, there's a lot to it, but it's definitely possible to make $100 a day doing this. All right, so as you guys can clearly see, if you were to have traded this exactly like I was just describing, all right, with a $200, for instance, we're going to say a $200 trade. If you're using $200 as margin with 20x leverage, and you were to have ended up trading this and you traded it all the way down to this Fibonacci level down here, all right, you would have made roughly 4%. With 20x leverage, you would have made about 80% profits right there. Okay, now here's the thing. All right, here's the cool thing. All right, we'll get the calculator out, and we'll take your $200 that you used as margin, multiply that by 0.80%, because you made 80% profits. You would have made $160 just within that 3 hours of trading right there. All right, so let me go ahead and show you another smaller example. All right, so this is another perfect example right in here. Okay, so we ended up going way the hell far up, but we ended up, again, this is what I'm talking about watching the candles and seeing what the candles do, because the candles all tell a story. Okay, so we ended up going up, but we ended up bears ended up pushing it all the way back down and creating what's called pretty much a shooting star candle. All right, a shooting star candle is a bearish candle pattern. And as I would have shorted this right at this level, this Fibonacci, the 236 Fibonacci level right in here. All right, so if you were to have ended up shorting that, you, again, with the same concept, you want to short it all the way down to either to the moving average or to the next the next layer below it. All right, so you would have shorted it all the way down to this level right down here. So if you were to have ended up shorting this right here, you would have made roughly, 1.23% profits. All right. So let's see here. What is 1.23? 1.23, multiply that by 20 because we're using 20x leverage. You would have made roughly 24% profits. All right. So you've got your $200 and you made 24% profits. All right. So from that trade, you would have made roughly $48. All right. So you just repeat this process that I'm explaining here multiple times throughout the day here on the 1 hour chart. All right. So within this whole time frame right here, for instance, within this whole time frame right here, you could have made it easily within, you could have made probably an easy $250 or so, just from doing those types of trades. All right. And the same thing kind of happened right here. All right. Again, we had our spinning top right up here. We had another spinning top right here. But then the next candle ended up coming down, came all the way down to the came all the way down to the moving average. Yes, it did end up going back up, but it did not go up past this previous candle right here. All right. So that tells us that, okay, well, there's still a lot of bearish momentum going on. So I'm going to enter a short right up here, and I'll ride it first all the way down to this first level right here. And then I'll place my stop loss and profit right above this moving average right here, and I'll continue to ride it down even further down to the next level. And that's exactly what happened there. So with this trade right here, you could have made, again, an easy, 2.25%. So you take 2.25%, multiply that by 20, you would have made 45% profits right there. You take your $200, multiply that by 0.45, you would have made roughly $90 off of that trade. So between these two trades alone, within a full day's worth of trading, you could have made an easy $150 just off of this trade right here and this trade right here. And then the next day, you could have made a trade going off of, going in the opposite direction, going long, and doing the same thing going upwards, all right? And then after that, you could have made this another trade identical to it, just in the opposite direction, going downwards right down here, all right? Overall, guys, I've personally been trading with just a single moving average, with just this 7-period SMA. Coupled with local support and resistance levels. For me, that's the Fibonacci levels, for pretty much over a year now, and it's been honestly really, really great for me. All right. However, as with most trading strategies out there, you will not be consistently profitable with it right away. Nobody is. All right. And you shouldn't expect yourself to be either. Now, if it was this easy, everybody would be rich. But if you take the time that it actually takes to learn it and be consistent with it, you'll start to see things on the chart like I am, or like I do on a regular basis. You'll start to see things on the chart that you never did before, and that's where you will start to be more and more consistent with your winning trades on a more regular basis with this strategy. Okay. Now, guys, before I go ahead and wrap up this video, if you guys enjoyed this video and if you guys feel like you got some pretty decent value out of it, please be sure to go ahead and help me out and subscribe to the channel, like the video with the like button down below, drop me a comment as well, letting me know what you loved about this video. And with that said, you guys, for those of you who stuck around and watched this whole video throughout the whole thing, thank you guys very much. I appreciate all of you.